investors and traders, and welcome to the weekly market report. This is AJ Monty with the Market Guys, and the market has just closed. It's 4 o'clock on Friday, October 21st. It's October expiration day for the option traders, and next week we're expecting some volatility, mainly because it's usually the week after options expiration that we get the most volatility. That's mainly driven by options and how they're exercised and how they're assigned. It usually gives people positions that they have to offset. But this is a chart of the diamonds, the Dow Jones Industrial Average ETF, and as I zoom in here, you'll see that this diagonal line is the line that I drew from last week's report, which was my forecast for this week. And you can see that we did move lower, as I mentioned on Friday. Here is Friday the close. We came down Monday, bounced a little bit. We pulled back from the 20 period moving average right here, touched my forecast line again, and we did so on high volume. Now, what does that mean for next week? Well, I'm going to first erase my forecast. Again, was an accurate forecast. We did move lower. And I want to point out to a little thing called the gap. A gap is a price void that's left on the chart, and there's a very small gap right here. And I think that the market is actually going to move up in an attempt to fill that gap, and then I think we're going to drop from there. So I'm going to leave that little tick mark there as we approach this target area. The fact that we have a green candle on high volume tells us that the buyers are starting to move in. I'm not expecting a raging bull market of any sort. I am expecting a little bit of a pullback to that gap point and then a reversal from there. So that's my forecast. I'll leave that in place for next week, and then you could trade according to those numbers. If you look at the S&P, that's SPY, that's the S&P 500 ETF. You'll see the same thing happen. Pulled back a little bit on Monday. Didn't quite get down to the support level that I thought we would test. But the fact is we did move lower than what we had on last Friday's trade action. So I'm going to remove that line, and I'm going to say that we're going to move up next week as well for the spiders. Again, that's my forecast. That diagonal line, I think we're going to move higher. So keep an eye on that. The fact that we have a green candle on increasing volume, that volume is really the key indicator. It's the most reliable leading indicator that you can get. When you have a green candle on higher increasing volume, that tells us that the buyers are starting to mount up. If you look at the Russell 2000, which is a more broad-based index, that came down to test support just as I said it would. Here is the support line that I drew down here from last Friday. I said we would move up early in the week, and then I said we would pull back. Isn't this amazing how the market moved up exactly how I drew those lines last week and then pull back? It's just each and every week we do this report. It is so accurate. Percentage of accuracy, by the way, 92.3%. We're tracking 12-month trailing accuracy numbers at 92.3%. Therefore, I think that next week's report is going to be as accurate. I think that we're going to move up on the Russell 2000 just like that because we bounced off of that support level, and because of this candle right here that is very close to a doji, most definitely what's called a hammer pattern, a very small bodied candle with a long shadow underneath. That is a bullish sign. So short term, I think the Russell 2000 is going to rally. Now, the Qs, which is the NASDAQ market, QQQ, I reported that last week. We came down just a little bit, filled the gap that was left on Monday. So we gapped up on Tuesday, pulled back on Thursday to fill the gap, and then we reversed. Now, interesting thing about gaps, and I'm going to give you a resource that you can go to learn more about gap trading. 80% of the time after a gap fills, the market generally reverses and goes higher. So in other words, if a gap on the upside fills to the downside, 80% chance it's going to reverse and pivot to go higher. So this is my forecast for the Qs. I think we're going to go a little bit higher, just like that, hit my target number right around 118.5, and then we'll have to see where we go from there. Finally, the VIX. The volatility index is, again, a very reliable leading indicator. And as you can see, the VIX is showing a series of red candles. Here's what I think is going to happen with the VIX. There's a support level down here. And remember, the VIX is a contrarian indicator. So if I just got finished saying that the S&P can go higher, that means that the VIX could go a little bit lower. And I think the VIX is going to do just that. I think it's going to go down to test that support level. And then I think the VIX is going to storm up as the market corrects and pulls back. And ultimately, the VIX will fill that gap. Why am I so confident in saying that? Here's why. That gap right there, like many other gaps, the VIX fills its gaps 100% of the time. It's an oscillating indicator. It's not a trending stock. So if you look, here's a gap right here. It was filled. If you look right over here, that high ultimately filled the gap from back here. You see that? This gap over here was filled on that day, and then it reversed. You can see, if I go back even further, there's smaller gaps like this one here, where the VIX gapped down, then ultimately filled here, and then reversed. So when I say that there's very close to a 99.9% chance that that gap is going to fill, you can pretty much count on that. But first, I think the VIX is going to pull back before it ultimately goes back up to fill that gap. Now on Monday, the 24th, the Market Guys is hosting an open house Q&A. All you have to do is go to the Market Guys website, scroll down just a little bit, and there's a link right there. That's a registration link. Click on that. It'll bring you to another page where you can enter your information. This is a free event. F-R-E-E, free. It doesn't cost you a single penny. You can ask me questions. You can have your stocks analyzed. Just submit your stock symbols, and I go through a rapid-fire stock analysis format where I go through, analyze stocks. You'll get some good trade ideas from some of the other folks in the audience who also submit their stock symbols. And we're going to have an action-packed 1-hour session, again, starting on Monday, the 24th at 8 p.m. Eastern. I hope to see you there. Have a great weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.